It is now the number one global concern for a variety of reasons. We're talking about the military strikes and the counter strikes in Iran. Joining us now from the Armstrong Advisory Group, Chuck Zodda, a familiar face. Chuck, thank you for taking the time to talk to us.
Absolutely. Great to chat today.
Okay, so now, Chuck, the markets, they took an initial hit. They have kind of bounced back. Where do you see them going from here, especially if these strikes continue?
Well, I think it's important not to read too much into what happens on the first day of any conflict, as market participants are struggling trying to get a grasp on what is actually happening. And so I think certainly you've seen a little bit of a rally over the course of the day. Maybe that reverses before the close, maybe even see, an extension of it. We just don't know how things are going to play out in the short term here. But what I can say is that ultimately, how markets react to this, it's going to be dependent on three things. The first is the duration of the conflict. Is this something that's over in the next couple days, or does it go on for weeks? The scope of it, how much of the region does it take up? And then from there, what's the intensity of the fighting? What's the magnitude of it? And so I think right now there are cases that could be made for any of those three categories where you could say, hey, it might not end up getting that bad, or it might, worsen significantly. And so there's just a really wide range of outcomes for how this could impact markets over the next coming weeks. So I think we have to be pretty humble at this point with what we think is going to happen because it's a complete unknown based on, where we stand today.
Now, Chuck, even if you're someone who doesn't watch the markets, you're probably paying attention to the impact of the cost of crude oil because that is an impact that we all feel. So the cost of crude oil shot up. So how much of an effect will this have on the price of gas if the conflict continues?
So just prior to this, if you look at the AAA national average for gas prices, we were in the high 290s for the last couple of weeks, anywhere from that 295 to 298 range. The estimates that I've seen based on data from Gas Buddy, they're a website that tracks this stuff on a regular basis, and they've got a pretty good handle on it from what I've seen. They're estimating that based on what we've seen so far, if crude oil prices stay in this range in the low 70s, we're probably going to see gas prices move up anywhere from about 10 to 20 cents a gallon over the next week and a half or so. Obviously, if crude oil prices move higher and we get into the high 70s or 80s, you could see larger moves. But this is the expectation that they have based on what's played out to this point. So I think you're probably looking, again, a 10 to 20 cent per gallon move based on, the knowledge of people who spend, all their time looking at this on a daily basis.
And now, when people start seeing the possibility of gas prices go up, then the thought is, okay, how else could this possibly trickle down? And in an economy that we're in right now, where everyone feels like it's just expensive to breathe, I think the next question now is, well, what kind of trickle down effect will this have on other items, if any?
Yeah, the problem is this does tend to spill over into other areas simply because if you look at transportation costs, they're often a significant chunk of a product's final cost to a user. So, whether you're talking about groceries, whether you're talking about heavy equipment, whatever it might be, typically those costs end up moving up as well as the additional gas costs get passed on to the end user. So unfortunately, we can see this spilling into different areas, but it's going to depend on how long this lasts and really what the magnitude and breadth of this conflict looks like. So I do want to point out, look, there is a chance that you could see, some kind of resolution in the coming days that might end up with a more positive outcome for gas prices, in the near future. But I'm just not convinced that that's where we go, just because we're really in uncharted territory. So I think people just need to be prepared for things to move in any direction when it comes to pricing here, because we just are in a situation that is very unpredictable at the moment.
And we've talked about pricing on items, Chuck, but what about sectors? Is there a certain sector that will probably be affected the most by this as we continue to wait to see where this goes?
Well, I think the obvious one that, people tend to think about is the energy sector of markets in terms of, hey, typically when you see energy prices moving up, it does mean more profits for energy companies. But the question here is, does this get priced in as just kind of a one-off event that isn't going to have a long-term impact? And so I think that's something that you have to think about there. The other piece, just talking about, the changes in prices. Remember, consumers have a limited budget with which to work with. They don't have the ability to expand their budget as prices move up. And so, one of the other things that you look at is, hey, if energy prices move up and they stay high, does that eat into their spending for other areas that they might want to typically spend money on? And so, do consumer discretionary stocks, do they maybe feel a little bit of pain? So, there's different ways that you can look at this. And again, there's so many different scenarios that it's impossible to identify one thing that is definitively going to happen. But I think these are the thought exercises that you need to have as you're trying to look through, some of the possibilities and assess how things might move in a situation like this.
And that's why this is such a good conversation because it will get us thinking, even though there are still a lot of question marks. Is there anything that you think is important for viewers to know, at least at this point, that I didn't
Well,
ask?
I think the big thing is just that this is a really, really unpredictable situation, and it's still very early. I mean, look, we're fewer than 72 hours since this conflict started. It's going to be, it's so hard to get quality information and actually understand what's going on. And so I
Mhm.
think, the biggest thing is just look, at least what I'm practicing, take every news report with a grain of salt, understand that you might not be seeing the full picture yet, and try not to overreact in any direction just because you don't really know what's a temporary situation, what's a permanent one, and it's just so hard to get good information at the moment.
Well, Chuck Zodda from the Armstrong Advisory Group, we thank you again for joining us, and I suspect that we'll be checking in with you again soon.
All right, have a great rest of the day.
Thank you.